Welcome back to Explain the Charts, everyone. Today, we're diving deep into Google, Alphabet's Class A stock, on July 29, 2025. Before we hit the charts, let's set the stage with the latest news and current events surrounding Google. Recent reports indicate that Google has been trading near the top of its 52-week range and consistently above its 200-day simple moving average, which is a classic bullish indicator. This mega-capitalization company, boasting a market cap exceeding $200 billion, is showing robust financial health in several areas. For the second quarter ending June 30, 2025, Alphabet reported total revenue of $96.54 billion, marking a strong 9.39% increase year-over-year. Free cash flow also saw a substantial rise, up 69.94% year-over-year to $5.30 billion, demonstrating excellent operational efficiency and cash generation. However, it's worth noting that while net income and earnings per share were up significantly year-over-year, they both saw a decrease from the previous quarter, specifically an 18.37% and 17.75% drop respectively. This quarterly dip could reflect increased investments, perhaps in their AI initiatives, or competitive pressures in the advertising sector, which Robinhood highlighted as a key focus for their earnings. Speaking of AI, Goldman Sachs recently raised its target price for Alphabet, citing the company's strong AI investment as a primary driver. This positive analyst sentiment is reinforced by prominent investors like Cathie Wood, whose ARK funds have reportedly been loading up millions on Google, indicating significant institutional confidence. Furthermore, Alphabet's autonomous driving subsidiary, Waymo, plans to expand its robotaxi services to Dallas by 2026, showcasing ongoing innovation and future revenue streams. TradingView data, though possibly referencing a slightly earlier period given our current date, noted Google stock rising 20% in 3 months, with resistance near $200 and a breakthrough above $207, potentially targeting $280 by mid-2026. Now, let's shift our focus to the charts and see how these narratives align with the price action. Looking at the daily chart for Google, we can clearly see the broader upward trend that has been in play, especially since early 2024, confirming the overall positive sentiment highlighted in the news. The rally is quite evident, with consistent higher lows and higher highs forming a clear ascending channel for much of the period. Notice how the stock rebounded strongly after dips, reflecting sustained buying interest. This resilience ties directly into the narrative of strong underlying financials and strategic AI investments. A critical psychological and technical resistance level stands around the $200 mark, which Google tested and surpassed briefly in early February 2025. However, the price saw a sharp correction in late February and early March 2025, pulling back significantly from those highs. This correction aligns somewhat with the quarterly net income and EPS decrease mentioned in the news, suggesting short-term profit-taking or concerns over immediate earnings impact from investments. The $150 to $155 range proved to be a significant support level during that pullback in early April 2025, acting as a bounce-back point before the stock resumed its upward trajectory. This level, marked by substantial buying volume, suggests a strong floor where long-term investors stepped in. Since then, Google has been steadily climbing again, albeit with some recent short-term volatility. The overall structure remains bullish, but the recent peaks around $197 to $200 represent a crucial resistance zone to watch. Now, let's zoom in on the 15-minute chart to analyze the very recent price action, specifically focusing on the period from July 24th through July 25th, 2025. Here we can observe an interesting sharp decline that occurred on July 24th, where the price dropped from around $197 down to approximately $191. This sudden drop, following a period of relatively stable trading, indicates a quick shift in short-term sentiment or perhaps a large sell order hitting the market. The high volume accompanying this rapid decline is also a notable point, suggesting strong selling pressure in a concentrated period. However, what's equally important is the immediate bounce and subsequent consolidation that followed this dip. By the end of July 24th and into July 25th, we saw the price recover to the $193 to $194 range, indicating that buyers stepped in quickly to defend this new support level. This quick recovery suggests underlying strength and that the dip might have been an opportunistic buying point for many traders. Such short-term volatility, especially around key psychological levels, is common, but the speed of the bounce often signals healthy demand. For traders, this range between roughly $191 and $194 became a crucial short-term battleground. Failure to hold above $191 would have signaled further downside, but the rapid rebound suggests that it has transformed into a robust support zone. The current close for July 28th on the 15-minute chart shows the price settling around $192.58. This indicates that after the quick recovery from the July 24th dip, the stock is now consolidating in a tighter range. The continuous upward momentum post-April seems to face some resistance around the current levels, indicating a potential sideways movement or slight pullback before the next major move. Now, while the provided one-hour chart data is from an earlier period, specifically mid-July 2025, it still offers valuable insights into the market's behavior over a slightly longer, yet still granular, time frame. During this period, from July 8th to July 16th, Google exhibited considerable fluctuations, oscillating between roughly $172 and $184. This range shows periods of consolidation followed by strong moves, indicating both profit-taking and renewed buying interest. For example, around July 9th to 10th, the stock made a notable move from the $175 region up towards $180 before pulling back, demonstrating short-term strength and immediate resistance. The volume accompanying these moves on the hourly chart provides additional context. High volume during price increases suggests conviction among buyers, while low volume on pullbacks might indicate weak selling pressure, reinforcing a bullish underlying trend. Conversely, if significant drops occur on high volume, it signals stronger bearish conviction. Observing these hourly patterns helps short-term traders identify intraday support and resistance levels that might not be as apparent on the daily chart. The mid-July range of $172 to $184, while not the current price action, gives us a historical perspective on where previous support and resistance zones have formed on a more active time frame. This historical data informs our understanding of potential future price action should the stock retrace to these levels. So, are we bullish or bearish on Google? In the short term, there's a mix of signals. The recent volatility and slight pullback seen on the 15-minute chart indicate some profit-taking and a potential for consolidation around the current $192 to $193 levels. Immediate overhead resistance is around $197, and the significant psychological barrier and prior high is at $200. A failure to decisively break above these levels could lead to a retest of the recent support at $191 to $192. However, the fundamental picture remains largely bullish for the long term. Alphabet's strong revenue growth, robust free cash flow, and low debt-to-equity ratio provide a solid foundation. The continued focus and investment in AI, as highlighted by Goldman Sachs and Waymo's expansion plans, position Google well for future growth. Institutional buying, like that from Cathie Wood's ARK funds, reinforces this long-term optimism. The $207 level is critical for a sustained breakout, potentially paving the way towards the ambitious $280 target by mid-2026, as suggested by some analysts. This long-term bullish scenario is highly likely, perhaps 70 to 80% probable, especially if the company continues to deliver strong earnings and maintain its lead in AI innovation. This likelihood is reinforced if advertising sales rebound stronger than anticipated and global economic conditions remain stable. A short-term bearish scenario, involving a pullback to the $170 to $175 range, is less likely, perhaps 20 to 30% probable, unless there's a significant negative catalyst, such as a broader market downturn or a disappointing earnings report that signals a slowdown in core businesses. Such a downturn would be reinforced by a break below the $191 to $192 support on increasing selling volume. When deciding when and what price to trade, look for confirmation. For bullish trades, observe volume spikes accompanying breaks above resistance levels like $197 and $200. For bearish trades or shorting opportunities, watch for high volume on breakdowns below support levels, particularly the $191 to $192 range. Momentum indicators, not provided here but crucial in live trading, would also help confirm price action. Keep an eye on the upcoming quarterly earnings reports, especially the commentary around advertising sales and AI development. Any major news regarding antitrust rulings could also impact the stock, although that appears to be a longer-term background item. The overall health of the broader tech sector and the market's appetite for growth stocks will also significantly influence GOOGL's trajectory. To recap our Google analysis, here are the key price levels and conditions to watch. Immediate support rests firmly around the $191 to $192 range, which proved resilient during the recent short-term dip. On the upside, keep a close eye on the $197 level and, more critically, the $200 psychological barrier. A decisive breakout above $200, particularly with strong volume, could propel Google towards the next major resistance at $207. If this $207 level is conquered, the path opens up for a longer-term target of $280 by mid-2026, a prediction reinforced by analysts' bullish outlook on Google's AI investments. This long-term upward trajectory is highly probable, contingent on continued strong financial performance and sustained innovation in key growth areas. However, should Google fail to maintain above $191, we might see a retest of previous, stronger support zones around $170 to $175, though this scenario appears less likely without a significant negative catalyst. Looking ahead, the primary events to monitor are Google's next earnings report, especially details on advertising revenue and AI segment growth. Any significant developments in regulatory or antitrust challenges could also introduce volatility, so stay informed on market news. Always remember to manage your risk and consider broader market trends when making your trading decisions. Thank you for joining us today on Explain the Charts for this in-depth look at Google. Be sure to like, subscribe, and hit that notification bell for more market insights.